Well, hello again, Solis Wealth family. Greg Solis here with our market update. First of all, got some great news. Well, Jack is back playing in tournaments again. He kind of had to take 2020 off with the pandemic and everything else. But 2021, he's off to a fast start, played in 3 tournaments, and in the 3rd tournament up in Visalia, he won. So hats off to Jack. He'd been working hard and trying to get his game back in order, and had a great round. He shot 65 on the second day, and that was enough to put him in first place. So congratulations to Jack. Nicole and Emily are doing great. Emily continues to work hard. She's in school and loving hosting, which is really neat. She's working as a hostess at a sushi bar here locally. Incredibly busy sushi bar, and she's loving it. And Nicole, of course, is cranking along in school and loving life in Hawaii. So Monica's doing great. Her and I are getting some alone time. So family's well, and I hope yours is as well. Continuing on our core values here at Solis Wealth Management, you can click down below and you can see the ones that we've already covered, but we're on core value number 7, which is lifelong learning. Lifelong learning is huge for us. We think that one of the main things that we talk about here at Solis Wealth Management is we need to be competent. We have to be knowledgeable. We have to stay innovative. We can never think that we've learned enough. I've been doing this, hard to believe, going on, it'll be 29 years this October. And I still learn almost every single day. It's crazy. The industry changes so quickly, and we got to be willing to learn and grow and adapt as things change. We got to be willing to move forward and get more knowledge. We have a little book club that we do here on Fridays. We get together, we read a chapter, and we discuss the book and use their books that are self-help books. They're either for personal growth or professional growth. And so we're just firm believers that lifelong learning is a big deal. So think about that. We love getting good counsel. We love wisdom. We want to listen to the right voices and listen to the right people and learn and grow to become better both professionally and personally. And so we think that's a great way to look at life. Market-wise, well, we got that correction and we were kind of looking for. It wasn't as big as I thought it might be. We were only down about 4.5% on the Dow. Again, I was kind of looking for that and thinking that's a healthy, good thing. We don't like going through the process, but corrections are good. It makes it so that the markets don't get overvalued, where the price earning multiples get too high, because if you go too far too fast, that could, of course, put us into a potential bear market. We don't want that. We want to prolong the bear markets as long as we can. So a good correction here and there is healthy and it's good and positions the market for the next move. The reason for it, there was a little, I think the market was looking for some bad news out there. We got a little bit of bad news. We had some issues with this so-called Evergrande. It's a Chinese real estate company. And people were concerned that perhaps this might be like a Lehman Brothers issue. We're not seeing that. We don't think it'll create that kind of ripple effect, but it was enough of a bad news to give the market a reason to sell off. I think that, coupled with the Fed, they met, FOMC meeting, the so-called Federal Open Market Committee meeting. They got together and they gave their report, and they're definitely seeing the supply chain issue as a real issue and kind of the labor shortage a real issue. And they're seeing that there might potentially be some inflation still. And again, so this is something that the Fed is very, very committed to controlling. They don't want to see inflation rear its ugly head and be sustainable over the long haul. So the question is whether this is going to be short term or not. And the Fed, of course, will begin to raise rates if they think that inflation is going to be a problem out there. But it's a little dicey because the economy is still a little bit weak with this Delta variant. And again, some of the supply chain creating problems with getting products out to the consumer. And so that could potentially slow the economy down. So it's a balancing act for sure. They did not change their policy. The Fed funds rate is still at the same level, and they seem pretty committed to keeping them lower. But again, I think they're watching it very carefully. They are talking about tapering their so-called bond purchasing program, the quantitative easing, probably towards the end of the year. So those are things that we're watching that are potential headwinds that we got to hopefully will work themselves out. We think that they will, so we're still optimistic. I think it's still going to be choppy, in the market. So hang on tight, continue to expect volatility in the stock market. But we do think as we go into 2022, things are going to look a lot better when some of these supply chain issues work themselves out. unemployment benefits will have expired and people will be going back to work. And so I think that'll help the labor shortage. And I think we'll begin to see things move along quite nicely as the Delta variant hopefully calms down as well. So that's our update for now. If you have questions, obviously don't hesitate to call us. Hope you're all going to be at the client appreciation party. Looking forward to seeing you. Take care and God bless.